Good afternoon, ladies and gentlemen. Good afternoon, Alexander. I'm happy to welcome you on our new class together with Alexander. And as usual, each month we meet to discuss the situation, to hear Alexander's opinion about markets, and to get knowledge, of course. Before we start, I will do a short intro, and as usual, to remind about risks, trading, investing. Those both activities are connected with the risk, so it's really, really important to, before you do any actions, before you start trading or investing, to understand all possible risk and to try to wait to work with them. Of course, during our class, we touch this point as well. For those who participate on our class for the first time, a few words about Admirals. We are a global company. We provide a service for traders and investors. Our traders can find more than 8,000 different instruments to trade and invest. As a platforms, we also provide different solutions, starting from MetaTrader platform to our native mobile app and also our native trading platform. As a small also notice, it's we started this month a new type of events which we call market talks, where we invite different traders, investors to tell their story. And just small advertisement for this month, we'll have Mr. Steve Nissen, who will tell us some words about his path in trading and his story. Yeah, and also to remind for investors who normally invest in different stocks, last year we also launched additional option for our invest offer, which called fractional shares. It means that you can buy not the whole share, but you can buy only a part of it. So there, with this tool, you can manage your portfolio with a bigger, high diversification. So this tool is available for our clients on our investor accounts. And of course, for those who are watching us on the YouTube and for those who came in Zoom right now, I want to say that all recordings we provide to our YouTube channel. So later on, I will share a link in our Zoom chat, and those who are watching us on the YouTube. So I want to encourage you to subscribe to our channel and not miss next webinars if you will not have chance to participate online, and also to Telegram channel to be updated about all our events which we produce about trading and investing. So as usual for today's agenda, so we'll go through current market situation. So as usual, it will be great to hear Alexander's opinion about what's happening right now on the market. We'll go through different markets like SP500, DAX40, EURUSD, like the main general, let's say, markets. Also, we'll have some stocks for review. We had, let's say, some participants in our contest, so it was really nice, and we will show some stocks which our participants sent to us, and we'll go to some specific stocks which can be interesting or potentially interesting, let's say, during current market conditions. As usual, I made a snapshot of the previous months of the year to show how different stocks performing, and generally we see that tech sector is doing well. So a lot of green squares we can see here, and especially I can say that Meta and Tesla are among leaders. And of course, after the middle of this class, we'll go through these stocks as well. So I'm finished with my introduction, so I'm happy to pass microphone to Alexander. Every time it's a pleasure to have this class, to get the knowledge from Alexander, and also for just small word, not a small, like not in this sense, but I just want to say that Alexander, for those who participate the first time, Alexander is a professional trader, teacher of trader, the author of bestsellers about trading, and the latest book is The New Trading for a Living. We also have this book in the contest, and Alexander, the floor is yours.
Thank you very much, Roman. I hope you can hear me well. Yeah.
Yes, all good.
Thanks. This is actually a great time to have our meeting because there is for those of us who trade stocks, there is a huge question on the table. Is the bear market over? Are we seeing the early stage of a bull market? Or is this a rally, a corrective rally in a bear market? And as this rally runs out of steam, the market is going to go and hit new lows, take out the lows of 2022. That's really the key question today. I don't pay much attention to mass media, but I see very diverse opinions. Lots of people are very, very bullish. I'm not too much. So I think we should start today. Roman, if you don't mind, I'll take over control to my computer and
Yes.
show a few charts, and then return control to you, and we will be doing our usual markets review. Okay, share screen. Thank you. Here, share. Okay, you should be seeing a chart, a weekly, it's loading up now, a weekly chart of the SP 500. Yeah.
Yes. All good.
So the basic definition of basic correction, a basic pattern of a bull market. We have higher highs and higher lows. For example, I will compress the data a little bit. This is the S&P, the US, the main index for the US market. The bottom of 2020. So definitely there is a new low, and the lower high, we're still in a bear market. And then we get a higher high. So the bear market is now in question, and a higher low, a higher high and a higher low, higher high and a higher low. High. You see, the pattern is the lows keep getting higher, the highs keep getting higher, and the lows keep getting higher. Finally, we had a final high of this bull market in November of 2021, and after that we have a lower low, lower high, lower low, well, slightly higher high, but again lower low, lower high, lower low, lower high, lower low, lower high. And then in December we had a new low which was higher. So this brings the pattern of a bear market into question. So instead of having a lower low, we had a higher low, and now we have a higher high. So if we only look at the S&P, we have to say this is a bull market. We have a pattern of higher highs, two of them already, and higher lows. But there is more than one instrument in this orchestra. In addition to the S&P, we have to look at the Nasdaq, which is the main technology index, and at the Dow, which is sort of the big classical industry. So let's take a look. Let's take a look at the Nasdaq. What do we see? Again, the weekly chart of the Nasdaq is loading up. We see a similar pattern here. So we had lower low, lower high, lower low, lower high, lower low, lower high, a higher low, and a higher high now. So same thing, the Nasdaq is giving us a pattern of a bull market. What about the Dow? Here, here the pattern is questionable. We have the pattern of lower lows and lower highs during the bear market. Then we have a higher high, and now that was the end of 2022. And now the Dow is refusing to rise to a new high above its December high. So we have two votes for the bull market and 1 vote against it, the Dow. As I said, in a bull market, we have to have all 3 confirming the pattern. Well, 2 to 1, close enough. So I will go to one of my favorite indicators, the new high, new low index, and see what it and see what it tells us. Well, let's see what it tells us. The new high, new low index, loading up. You will see a weekly chart on the left and the daily chart on the right. I track the new high, new low index in 3 daily windows. My look back windows are monthly, quarterly, and yearly, which of course creates a much deeper view than looking at it just on a yearly chart, which is what most people do. But for long-term decisions, the most important chart is the weekly chart. And what we see here in the bear, this is the S&P, and at the bottom is the weekly new high, new low index. This line, let me color it. Maybe I'll give it a different color to make it more visible. I'll color it red. So didn't work once again. So this red line, that's the 0 line. So when there are more new highs than new lows, the new high, new low index stays above the this dashed line. And when there are more new lows, it stays below. You can see that during the bull market that began in 2021, the weekly new high, new low index excuse me, stayed above the 0 line essentially all the time. Occasionally, there is a short correction, and the new high, new low index goes negative very briefly, and then comes up again. That situation changed at the end of 2021, when the new high, new low index went below 0, and it's been staying below 0 pretty much ever since. Every time there is a little rally, or every time there is a medium-sized rally in the market, there are no big rallies in bear markets. Anytime there is a rally, the new high, new low index comes above 0, and let me mark it for you. Comes above 0, and that's pretty much the top of the rally. Comes above 0, and that's the top of the rally. Comes above 0. That was last August, and that's the top of the rally, 1 week early. The signals are often a week or 2 early. It's a strategic signal, not a tactical trading signal. And what do we have here at the towards the right edge of the chart? In early February, the new high, new low index on the weekly chart made a new high. It's not an impressive high. Compare how high it was during the bull market. It was having weekly readings of over 1,000, 2,000. Here the weekly level was a little, just a few hundred, 800, I think. And it's coming down. So to me, the market looks like a coin, feels like a coin that is falling, but instead of falling flat one way or the other, it's standing on the edge, trembling, and trying to decide which way to fall. So it's an extremely unresolved situation. Is this a bull market or a bear market? We have 2 strong signals for a bull market from the S&P and the Nasdaq, and we have 2 strong signals for continuation of a bear market from the Dow and from the new high, new low index. So I wish I had a magic crystal ball to look into the future and to tell what the future holds. But at this point, I can only say the bear market has not. The bear market is not finished. We don't have a confirmation from the Dow, and we don't have a confirmation from the new high new low index. When we get those confirmations, I'll say, I have to admit this is the bull market. At this point, the confirmation is not in place, and as long as we don't have it, the bear market. I trade with a view that the bear market is not finished yet. Most of my trades are short trades. I'm a short-term trader, and so I more often take positions from the short side, occasionally a long side. But I run my account, my own private trading account, I run it like a hedge fund. I always have some longs and some shorts, and I always balance more longs or more shorts. At this point, I still have many more longs. Oh, sorry, many more shorts than I have longs. So that's my market overview. Let me show you just one more indicator. I know Roman likes it. The new high new low index is described in all of my books, but this indicator, capitalization based new high new low, that's a fairly new item, just last couple of years. Here I in this indicator I multiply the number of new highs and new lows in the monthly window by the capitalization of the stocks that are making new highs and new lows. What we see, let me just circle a couple of things for you. How about this? You can see the green line of capitalization-based new high making a peak above the $30 trillion mark. Stocks go higher, there is a bearish divergence, and that's the end. Here, one more time, that was last last November. A similar pattern. The green line goes to 30 trillion mark, indicating very strong buying activity, and usually it's an exhaust level activity. And here, 2 weeks later, the S&P makes a double peak, massive bearish divergence of this capitalization-based new high, new low, and the market goes into a correction. Now, near the right edge, the market, the green line of the capitalization-based new high, new low made this huge peak, reached the $30 trillion mark, and stayed. The market has been flat to down since then, and the green line certainly shows weakness of the bulls, but it's too early to judge. I think it may well take another week or two to finally resolve. So the market is like a coin standing on its edge. It can fall this way and that way. I am continuing to, well, I trade both sides, but I trade much more heavily the bearish side, because as long as the bear market has not been canceled, it's in effect. And so I am prepared for the December lows to be broken, and the market to go, not just December, but the October lows to be broken, and the market going substantially lower. But it's not 100%. As I said, it's a coin standing on the side. I think I'm repeating myself. Roman, I will stop sharing and I will hand control back to you, and we'll start looking at your markets on your machine. Okay, is that correct?
Yes, thank you, Alexander, for this introduction. And I'm sharing, and I opened DAX40.
there was a wonderful shorting opportunity in the DAX last week. And a friend of mine who wrote to me about it, I wasn't watching it at the time. I said to him, I think you'll get another opportunity. What we see, for those who are new to our meetings, we always look at weekly and daily charts. Strategic decision on the weekly, tactical on the daily. The weekly chart on the left, you can see that the DAX is rallying. It's actually approaching its bull market peak, hasn't quite reached there. At the right edge, there is a bearish divergence of force index. That's at the bottom. You can see how as DAX was making this final high, the force index got weaker. What is this? Is this the end of the rally or just a pullback, which will give us a buying opportunity? Let's take a look at the daily chart on the right. Here, I see just beautiful trading signal from a bearish divergence of an MACD histogram and prices. You can see how the DAX made a high in January, and then it rallied to an even higher high in February. But the MACD histogram made a high peak, broke the zero line, came back up again, just a little, and now it broke below the zero line again. You see this pattern 5 days ago. There was a pattern of a kangaroo tail where the DAX opened flat, rallied to a new record high for this move, could not hold, closed near the low, and the next day it fell back down into its value zone. It's trying to rally again. So I wrote to my friend in Denmark who trades DAX all the time. I think it will give you another opportunity. But the best opportunity was last week, of course. So the best so far. So the DAX, if I was as a long-term trader, I don't see as a long-term position holder, I would have to buy because the long-term trend has turned up. But prices on the weekly chart are near the upper channel line, overbought, and on the daily chart there is a bearish divergence. So I would be very, very careful about buying here. Shorting, I don't think we have a clear signal at this point.
Thank you, Alexander. Opening a EURUSD.
Okay. There was a huge bear on the weekly chart. We had a huge bear market in EURUSD. A set of bullish divergences on MACD histogram in the middle of the chart, and then a super powerful rally. Every rally deserves a rest, and you can see how twice during this bull market there was a pullback towards the value zone. So the weekly chart shows strength and it shows a pullback. If you're a bull, pullbacks are good because that's when you can go shopping instead of chasing prices on the way up. If we now turn to the daily chart, we can see that the euro is trading below the value zone, and it made this huge deep bottom of a MACD histogram, and now MACD histogram is rising. So bears continue to hammer on the euro. They keep selling the euro, but you can see how the euro is holding its support line very nicely, and the MACD histogram is showing that bears are slowly but surely losing power. Now, I wouldn't. I try not to buy at this kind of strong MACD histogram bottoms. because very often, usually, not always, but very often, usually they get retested. So I would expect a small rally in the euro, then another decline towards the current lows, and MACD histogram becomes much weaker. That's really, that should be a safer buying opportunity, I think.
Thank you, Alexander.
Sure.
I'm opening gold.
I was just reading an article in today's Wall Street Journal about gold. Apparently, the price of gold is pretty much what it was 12 years ago. Not too many things cost the same. And central banks are buying gold. You know, they say there's all this talk about they used to call gold the barbarous relic, but people feel safer owning gold, owning physical gold, and central banks the same. They buying, shopping for gold again. Gold had a bear market, and just take a look at this on the weekly chart. This amazing upward pointing kangaroo tail. That was panic buying, and once it was rejected, we had a bear market in gold. Approaching the low, gold was below its channel, which is a panic zone. Force index, if you look below, was showing fantastic bullish divergence. Now gold rallied, and last month it actually went above the channel line, so it shows now it went from a selling panic to a buying panic. There is no bearish divergence on the weekly chart, but MACD histogram is declining, and gold has entered its value zone. Value zone on the weekly chart, value zone between the two moving averages, the fast and the slow. So at this point, I would be getting ready to go fishing. The bull market hasn't been canceled. The pattern of the bull market is still in place. Gold is having a correction. Let's buy this correction. However, it's not a good idea to try to catch the bottom. There's a wonderful book by a very successful money manager, Peter Lynch, One Up on Wall Street, and he writes there, trying to catch a bottom, it's like trying to catch a falling knife. You invariably grab it in the wrong place. Knife is flying through the air, you try to catch it. Well, you may not catch the handle, you may catch the blade. Don't. So the weekly chart says, look to buy. We go to the daily chart, and the daily chart says too early. MACD histogram is very deep. Force index doesn't show any kind of bullish divergence. Too early. The panic selling hasn't finished yet. It is entirely possible that later this month we'll have a nice buying opportunity. I'd like to see some divergence of the force index. And then we'll go. So what are the chances of you will remember this 2 weeks from now? You know, if I said to you, this is a great buy today, well, that's easy enough. You put it into your computer screen, you start watching it. But if I say to you, I think we may get a buy signal later this month, how will you remember that? My suggestion to you, my suggestion to any serious trader is you take this chart and you draw on it what you heard me say, a bullish divergence of force index on the daily chart. Draw it with a red pen, mark what the chart needs to do in order for you to become bullish, and then put the chart on the wall near your computer screen. And so every time you come to your computer, you look at the chart and it reminds you, that's what you're waiting for, that every day. That's what you're waiting for. So have your reminder not in some kind of electronic file, which is easy to overlook, but in a physical piece of printout on the wall that reminds you every day what you should be watching and being ready to trade.
Thank you. Let's look on oil.
Oil has been given up for dead by many people, but if you look at the weekly chart, you see that oil stopped declining, and it's tracing a gorgeous, beautiful, bullish divergence of a MACD histogram and of the force index. Gold is lower now than it was in the middle of last year, but MACD histogram is higher, force index is higher. Basically shows that long-term bears lost power, bears lost control. The gold is becoming, the oil is becoming bullish. Now, in the very short run, we see that oil on the weekly chart, we see that the latest bar has declined below the fast-moving average. Actually, Roman, I'm surprised why the impulse strip didn't become red. It should, because if it's below moving average, it's red by definition. But you know, we can check it out later. Certainly looks very bottom. We go to the daily chart on the right, and it sort of gives you a suggestion how to trade it. You can see that every month or so, oil sinks below its value zone. And if you look right in the middle of the chart, it happened in January. It sinks below, stays below, and then on the MACD histogram, you can see that the impulse system stops being red, and it now turned blue, and we're allowed to buy it. Similar thing happened in January. The impulse system red, and then one day it stops being red, and prices are still below value, and that's the permission to buy. Right now, at the right edge of the chart, the weekly chart is below value. The daily chart is below value. The impulse system has gone red. No rush to buy, but the buying opportunity can well happen this week or next week. Again, keep an eye on the MACD histogram on the impulse system. If the impulse system stops being red, good to go. Roman, here, same thing again. I think I'm not sure that the strip is giving colors correctly. If you want to look at it, if you want to email me, we can compare our numbers.
Okay. Yep. Thank you, Alexander. And let's look at Bitcoin, just in case. Check what's going on with him.
To me, I do not trade crypto. I think that market is just too full of hot air, too much crookedness there. It's works for some people, not for me. But I do look at Bitcoin every day, because to me it's an indicator of risk, of acceptance of risk among traders. When people are afraid to take on risk, Bitcoin goes down, and when the people love risk, Bitcoin goes up. So you can see on this chart that Bitcoin has been going down for quite some time. Now on the weekly chart, it reversed. made a new high and the low and rallying again. So maybe risk is coming back into the system. It's certainly saying that if you're going to trade Bitcoin now, it should be traded primarily from the long side. But as I said, that's not my cup of tea.
Thank you, Alexander. We made then the whole overview of key markets. Thank you for that. And now it's time to check for stocks which was sent by our participants who took part in our competition. And I will share my screen again to show two trades, like two stocks which was sent. First one is Berkshire Hathaway, Class B, not the expensive one, the cheaper one. And here, as usual, for our participants, I will say that we normally go through review of stocks which was sent. Today we have one position which closed by stop loss, and another it's still open, but it's pretty close to take profit. So we'll start with the first one, which was closed by stop loss, to allow Alexander to do a quick scan from his side how he see this trade. And just to mention, so here was an entry price, so it was long position to buy this stock. Here was entry price. The red line below, it's a stop loss, which was executed. And here the same as usual on a daily chart. Here is the entry price, and here is a stop loss.
Okay. You know, first of all, I am glad that our participants take part in this friendly competition, doing work and providing their charts. And as you know, sometimes I look at a chart and say, wow, what a beauty, how correct it is. That's not what I can say today. I see a couple of things. I'll start with a compliment, and then I'll start with two criticisms. The compliment is having a stop that doesn't allow you to lose too much money. It's really a very, people who trade without stops get into trouble. But the participant who did the stock, at least they had a stop. What I don't like about this trade, on both charts, both weekly on the left and daily on the right, you see a double top in the middle of both charts and a false upside breakout. To me, that's one of the most reliable signals in technical analysis. When a stock takes out the previous peak, okay, new high, we're going higher. And then a few days later, it sinks back below the previous peak. It means it tried, but it couldn't. It's weaker than it looks. So to buy something after a false upside breakout is really not a good idea. Difficult, I trade false breakouts, but they're difficult to catch, of course, because you have to watch the stock. I keep an eye on stocks that are breaking out to a new high, and then I watch to see, will they continue flying or will they turn around? If they turn around, hit them on the head, sell short. So here the stock tried to fly, turned around. Well, that's not the time to buy. So that was one mistake. I wouldn't have considered buying it. Another mistake is this. Some stocks are very hot and you got to buy them quick. But this is a very conservative stock, trades very smoothly. Why overpay? Why overpay? Why buy above value? So if we look at the daily chart, I cannot, so the moving average, let's say, was about 310, and our participant paid something like 311. Why pay more? It's not going to run away from you. It's a, if it was something, some kind of wild Stock, yeah, you got to grab it quick. But a conservative, peaceful stock, buy it below value. Furthermore, you can see before the person bought, this stock has been trading below value for quite some time. Why don't you calculate what is the average downside penetration? So if the blue line, which I think, or the red line, the fast moving average, if the red line is, let's say, at 311, and this bottom is at 295, so the penetration was $6. So do a quick calculation. You can do it by hand if you like. What is the average downside penetration? And let's see if the average downside penetration is $3 or $4. Put your buy order there. Let the stock come to you. Don't chase. It will come to you. And if she won't come to you, her sister will come to you. Try to buy below value, and in a peaceful stock, you calculate what's the average penetration, and you put your order at that average number. Very, very, very high likelihood you will get it.
And actually, yeah, it's HR indicator, which is also available in MetaTrader platform, which helps to get, let's say, this quick understanding. So I also added it here as usual. So just for checking, let's say, all the time. Thank you, Alexander. And another stock is Caterpillar. So actually, we discussed this stock on our last class, and one participant suggested to go short with this stock. So, and here the entry price for sell. Here is a take profit. It was, let's say, $5 above the profit line, actually. And the same on the daily chart. So here's the entry, here's the take profit, here is the stop loss.
Very nice. Very nice. I think, if I'm not mistaken, Caterpillar had earnings. This is what accounted for this gap. If you give me a second, I'll look it up and I'll tell you. 1 second. I always have that website available. There is a wonderful website, Finviz, where you tons of information and good price, free. Yeah, I was correct. January 31st, Caterpillar had earnings, and the earnings were disappointing, and the stock fell. I'm happy that our participant is sitting on profits, but one criticism which I must say very loudly: don't trade before earnings. It's gambling. Trading before earnings is gambling. Here earnings worked for our participant. But if you look at something like Airbnb today, it gapped up like $9. Imagine being short. This is one of the absolute rules as far as I'm concerned. Do not trade before earnings, because if you do, you're not trading, you're gambling. Wait for earnings. Wait for earnings. Other than that, well, it's a nice trade. Technically, you can see how on the weekly chart, MACD histogram keeps getting weaker. On the daily chart, our participant traded a little too early, but there was a beautiful bearish divergence the next couple of days from MACD histogram. And yeah, the stock is approaching his target. Good likelihood he will get it. Although I would compare the low prices of this first bar and the second bar. Can you do it, Roman?
I have a picture here, so I don't have chance.
Okay, I'll get it. I'll get it on my screen in a second. So it's cat. So the first low was $242. I'm rounding off, 242. And the second low, more recent low, was 241.55. I'm coming back to a picture. So the first low, you see there's two recent lows on the daily chart, right? First low, 242. Second low, where you're pointing, is 50 cents cheaper. What does it mean? It's a false downside breakout. So bears tried to push the stock down, but they managed to go below the previous low, and they failed because the stock then turned around and closed higher and trading up today. If I was short of this stock, I would be, there's a nice profit here. It's not 100% profit that you planned, but it's maybe 80% profit. 80 is a very good number. I know that when I trade, when I write, I create a visual diary probably for 99% of my trades, almost every trade. And one of the things which I always put into visual diary, what percentage of my profit target I got. And sometimes it's 100, but more often it's less than 100. As a matter of fact, I have a rule. If I achieve 50%, if on the entry day I already have 50% profit, I close the trade. If on the second day I have 80% of the profit, I close the trade without waiting. If after that I use judgment, this obviously is much more than 2 days. The entry was lucky. Entered, could have gotten really hurt on this thing, but in this case the earnings worked for you, and the stock is refusing to go lower. You have about 80% of your planned profit. I would just ring the cash register, put it in your pocket, zip up your pocket so that nobody can take that money from you, and walk very nicely home.
Thank you, Alexander. So I just want to say that the participant who suggested Caterpillar for today's class will get a book with Alexander's signature, the latest book, signature already here. And I will contact on our YouTube channel with this person. And of course, for all participants, in the end of this video, in the end of this class, I will explain the rules for our contest. Thank you, Alexander.
Pleasure.
I'm switching back to platform to look at some stocks which I sent to you previously.
I see you pulled up all the giants: Meta, Tesla, Nvidia, AMD, MMM. It's big boys. There is a very interesting guy who publishes his work. You can find him on Twitter, and then you can find his email. His name is Charlie Bilello, Bilello, and he runs some pension money. He works for a pension fund, but he does very good. He's a very serious researcher, and every Friday he sends you 10 charts. So I was reading his 10 charts a few days ago, looking at them. He basically says that it used to be that the stocks that you mentioned, Meta and Tesla, Microsoft, all these giants, they had earnings growth, they had everything, and apparently now it's like they hit a wall. Their results are much weaker, but the stock's already rising. So we're not gonna argue with the results. We're gonna trade the stock. So Meta traded to below 100, had a nice rally from there, and had this absolutely crazy, insane gap on earnings. I know because I was watching it. I was actually in the Dominican Republic looking at my screen as the market opened, and this was wild. So However, wildness did not persist, and on the day of earnings, Meta had a crazy jump. It went from what, about $148, from $150 to $180 in 20% overnight, and has been sinking ever since. So on the weekly chart on the left, Meta is overbought. Meta is at the upper channel line. If we look at the daily chart, we can see how Meta is coming into the value zone. We may very well get a nice buy signal here. And again, don't catch a falling knife. Right now, Meta is supported by nothing but hot air. So make sure that the bottom is in place before you start shopping. I think the stock is asking to be bought. It's first of all, it's tremendously undervalued if you compare it to its historical numbers, but it's completely overvalued in the short run. I mean, the stock has doubled since what was it? Since September. 5 months to double. If somebody held a gun to my head and said, Alex, you have to take a position in Tesla, go away and come back for Christmas, I'd buy it. But if I have an opportunity to look at it and manage my position in between, I would be in no rush to buy.
Thank you, Alexander. Let's look at another racer, I would say, Tesla.
So Tesla was trading at $1,200 last summer, and of course it had a split. So it's $400, 3 to 1, 1 to 3 split, and now it's trading at 220. So it recovered about half of its decline. So it went from 400 to 100. It lost 3/4 of its value, and now it's rallying and rising, and it's overvalued on the weekly chart. If I look on the daily chart, and actually I was looking at Tesla just less than an hour ago. If you have access to numbers, Roman, give me the numbers for the first peak and for the current, for the peak from last week and current.
Yes, the last one, not the last one, but the previous one, high
213, yeah, 214, we round off, $214. And today,
a little bit higher, 214 and 40.
43 cents, right? And yes. And what's the price at the moment? 212, right? 212. So could it be that we're looking at a false upside breakout? What do you think? Is that possible?
Can be.
Can be. So how do we trade this false upside breakout? The weekly is the most important thing is that the daily is no longer red. Force index is showing a bearish divergence. Yeah. And the stock is high, overvalued, right? So according to this moving average thing, the value of Tesla is somewhere between $180 and $192, and people are paying $212 for it now. Why don't we sell them some? Sell a little short, and we can use a fairly tight stop if it goes. What was it? 214. 1 ATR on Tesla. I'll tell you in a second.
Right now it's 10.83.
Okay, so $11. I would put a stop no more than 1 ATR on it, maybe even less. It's really a very speculative trade, but if it's a false upside breakout, and everybody, and we're in a situation where everybody is happy and everybody, not everybody, but lots of people think that the bull market is back. Look at the weekly chart. Where is Tesla? Tesla is hitting its head right now on a very well-established resistance. Right? This level of about 212, something like that. This is where a previous decline stopped. This is where a previous decline slowed down, and now it's coming back up again. This kind of key area, low 200s, where moves tend to stall. The stock is trading way above value. We have a false upside breakout. Yeah. Doesn't look bad.
Thank you, Alexander.
Very welcome.
We have a couple of minutes ahead, and 3 stocks, if you don't mind.
Oh, of course.
The next one is Nvidia.
It doesn't look very different from Tesla, doesn't it? Except in one. In any case, the weekly chart is way overbought. It's at the upper channel line, right? So the weekly chart is having a manic episode. We go to the daily chart. Let's compare the price numbers. Last week's high and yesterday's high. This one? Yeah, last week.
Give me a second.
Sure. Was this one? Yeah, this one. Yeah, the
Yes.
highest high of last week,
Yes.
of course. Yeah, I didn't see it before. Thank you very much.
It just should appear, sorry. Or it's not appearing. Oh, okay. So the yesterday is 230.46.
Okay.
And the previous one, it's not.
I understand that slapping your computer does wonders. Let me do it on my just joking. So last week's high of Nvidia
230.18, I found.
230.20 says my computer. Okay. So 230.18, back to you. 230.18, and yesterday two.
I don't know, it showed me only once.
Okay, and yesterday yesterday 220.5, and last week 230. Could it be? Oh, looking at the wrong one. So yeah, it was 230, and yesterday was 230.5. So yeah, we have a 50-cent breakout. 50 cents. I don't know what's about 50 cents. We had 50-cent breakout in Tesla, and we have a 50-cent breakout in Nvidia. Trading above value. We can put a very tight stop on this thing. Interesting, very interesting.
Thank you, Alexander. So I think I just quickly add AMD, but I think the situation can be pretty much same. Yeah, not actually the same, but I prefer to look at 3M company because it's have had an opposite direction. So if previous stocks rose, but that one declined, and what actually also attracted my attention, I will just quickly show for everyone on the monthly chart. It's
weekly,
also interesting.
Weekly or monthly? Weekly.
I mean, like for a month, it also was, let's say, some bottom, which was at 2019, and yeah, and now I'm going back to weekly chart as usual.
You know, I mentioned earlier about putting those, printing out charts, marking them up, and putting them on the wall. This is precisely the kind of thing you want to put on the wall if you're a long-term position trader, investor. The stock is declining. The stock is declining. But look at the power of bears on the weekly chart in September. And now the stock is moving in that direction. Bears are very few and far between. So I would wait for weekly MACD histogram to tick up. In an ideal world, we'll get a double bottom with a false breakout, the second bottom a little cheaper than the previous one, but we may not get that. As soon as MACD histogram ticks up, we're legitimate to buy this thing. And interestingly enough, a similar looking pattern on the daily chart on the right. Look how tremendously powerful bears were on MACD histogram, how tremendously powerful bears were in January. The indicator came above the zero line, breaking the back of the bear, and now at the right edge, where's the bears? Bears, where are you? Where? The stock is almost as low as it was in January, and bears are nowhere to be seen. Look at the force index, how it shows disappearance of bears. So this looks like a very attractive trade coming together. Today, I don't think so, because the weekly is still red. The weekly is still MACD histogram is declining, but could be within days, weeks for sure, but within days of giving a very attractive buying opportunity.
Thank you, Alexander.
Pleasure.
We are a little bit out of time, so I suggest it was a couple of questions, but I suggest to leave your questions as normally we do under our YouTube channel. And next time, on our next class in March, we'll go through those questions which our participants might have, or maybe there was already answered during our class. So that's also, I believe, good. Thank you, Alexander. So, as usual, it's a pleasure to meet you, to hear your opinion about markets.
Thank you. Thank you. I just want to add, two books. There is a book I mentioned, One Up on Wall Street by Peter Lynch. Very good book. Old book, but very good. And then, since the name of Buffett came up, probably the greatest investor of our era, there is a fantastic book about him called The Snowball. Big fat book, but so extremely well written. Pleasure to read. So if you're looking for intelligent books on trade, intelligent books related to the markets, this is a tool I recommend. Roman, thank you very much. Pleasure working with you as always.
Thank you, Alexander. Thank you for suggestion about books, and see you next month.
Thank you. Looking forward.
Thank you. And dear participants, as I promised, I will say some words about how it's possible to leave questions to Alexander. Unfortunately, we didn't have a lot of time during our today's class, but it's doesn't mean so you will be able to get the answer on your question. So let me get back to my presentation, and I will quickly say some words. So first of all, regards questions. So tomorrow our webinar will be uploaded to our YouTube channel, and here's the link one more time. So if you're not subscribed, please do, so you will get a notification. We will be when the video will be there, and you will have chance to leave your questions. I normally collect it in advance and send to Alexander, so we spend a little bit less time because we have a limited amount of time for our class. Yeah, please do. And also for indicators, we showed examples on MT5 platform, which is accessible for our clients, and we also offer Alexander indicators with his permission to use and to offer to our clients. So actually you can get the same setup as we just showed, as Alexander used, but he used another platform, but the signals and instruments are the same. So to get indicators, it's really simple things you need to do is to send an email to elderdisk@admiralmarkets.com. I'm sending right now email into our chat. And for those who are watching us on the YouTube channel, you can find it below the video, like in description. And in this video, you just add in this email, you just put in the subject line elder indicators, and our customer support team will send you back indicators, chart templates, and video tutorial how to install. The important point: those indicators are available only for real accounts, so the balance of account should be not less than €200. So it's free of charge. Let's say this indicator, so you can use, you can try, you can apply some parts to your trading strategy, and to be more involved in our classes. So I strongly recommend, because it's, as Alexander showed, for some examples which we look through, like from stocks which were sent for a contest. So sometimes the sign is quite obvious, but it's hard to find the correct instruments to recognize it fast. So those indicators, they can help, and actually all indicators, they help to reproduce the pattern, like how to trade. So feel free to send a request, and we will send back the whole package, so you will have chance to try them during your demo trading if you want to try, and also to apply to your real account positions. And of course, about the contest, so we have a gentleman contest where the price is really great price. The book with Alexander Elder's signature, of course, his book, the latest book, The New Trading for a Living. And we have this contest in our YouTube channel. So it's the same like we went through today during our class for two stocks, for Caterpillar and for Berkshire Hathaway. So what you need to do in order to participate in this contest. First of all, as I said, the contest took place in our YouTube channel. So link one more time. You need to subscribe to Admirals YouTube channel, like the video with the recording, so the latest one. Suggest one trade for one asset which is traded in Admirals. So as I mentioned, we had thousands of instruments, so normally all instruments we have in our offer. So but in any case, you can check like in your platform on our website. So in this contest, you need to suggest entry price, stop loss price, take profit, and date of post when you making your suggestion. So here on the screen, I have a simple example. So you expect that price, so you want to go short on this instrument by price 163, stop loss on 166, and the take profit on 151. And the calculation is really simple. So among our participants, the high probability of winning is on those whose position will be closed by take profit, and if it will be open position but with a profit, like we had today with the Caterpillar, so you'll also have chance to win. So the highest movement from entry price to closed price to take profit, or to latest price for the last day of the contest, and you will get the chance to get the book. So we have this contest for months, from one class to another. So you can start sending your suggestions for this contest. So we accept only one. Yeah, just only one thing, only one. Starting from 16th of February till 22nd of March. So we have almost the months of period for this contest. So it can be, let's say, a trade who can be which can be held, for example, a week or 2 weeks or 3 weeks or 2 days. It doesn't matter. But yeah, you can use Alexander's indicators, let's say his approach, or to use your own. And later on, we can also we normally review 1, 2, 3 stocks, let's say during our class, one with a profit, one with loss, just to get Alexander's opinion how it's possible to develop. And as we saw, we had some suggestions for a losing position, for some winning position. So every time it's really good to have a feedback on some real examples. So what we normally do during our class. And also it's prohibited to edit comments. So if it will be signed that it was edited, unfortunately, we'll be not able to accept this suggestion into our contest. So feel free to participate. So the video will be tomorrow uploaded on our YouTube channel, and you will have chance to start participation on on our contest. And of course, next time, next month, we were happy to see you again on our class in March. And as I said at the beginning, we started a new session, Market Talks, where we invite different traders, different investors, like to read the book, let's say, about this person. And next week we'll have a guest, Steve Neeson. So we have the series Market Talks, so you can register there as well. For those who are watching us on YouTube, link for registration will be also in description to this video. And for others, you can register also on the website, and I shared previously a link, so you can follow this link, and we'll be happy to see you there as well. Thank you so much. Thank you for your participation. Thank you for your attention. One more time, please send your questions. I'm really, really sorry that we didn't have time to answer all questions. We are literally out of time. And please send your questions if it wasn't answered during our class, and leave them under our YouTube channel, and we'll go through it next time. Yeah. Thank you so much. It was a pleasure to be here with you. So see you next month. Thank you and have a good evening.